So I think I need to go a bit faster because I don't want to make too much episodes about my mistakes and what it all does. So as you can see, I had this Galapagos win that I told you about earlier, like the deal with, it's actually not a merger. I told it was a merger, but it was actually just a corporation deal or something. Not the same thing, of course, but it was really good news for Galapagos. So I made like 1,000 euros and an 18,000 euro investments for no reason, like this as well. And if I would kept this longer, like especially when the news came out, I would have made so much money, but I kind of sold a bit too early. So maybe I want to go over this one really fast because this shows how you can miss out on potential huge gains. So as you can see, I bought my Galapagos long turbo here, and I immediately sold when it came here. Like I was really happy with the profits I already had, but yeah, as you can see, I really sold too soon. Like if you have multiple times hitting the Bollinger Band at the top side, it really is a good indicator that something is about to happen. Like you can see, it happened here, it happened here, it happened here, it happened here, it happened here. Like this is such a good indicator that stock is going up. So I think I'll make that one of my rules. Top side. No, we'll make this one a new one. Top side. Multiple top side Bollinger Band hits is good. It doesn't matter top side for this. Like I should make it more general. Like at the bottom side, it's also a good indicator. Something like this. So we'll see in my next. Let's go to the next one already. This is gonna be the Melexis one. Yeah, this is one of both. I think I'll do them both at the same time because they're so bad. But yeah, I have so much trades to go. Oh. Okay, let's do this one, and then I think I'll wrap it up for this analyzing part and just think of, like, analyze for myself, look at the trades and think of a few rules I want to add. So let's look at the Melexis. It happened 26th of July and the 1st of July, so we'll see the full month of July. Be right. So here we have Melexis. I bought my first long turbo. I finally said it right from the first time. Here at this point, obviously I thought the pattern was gonna reverse of this downward trend, and it actually did for like a second or something until it stabilized. But yeah, you can see what I sold. Mine first one was 1st July until 5th of July, so probably like I sold my long right here or something, just at the bottom, thinking, oh shit, this is not where I want to go. And if I had like a stop loss here or something, or even lower, I probably would have kept it, but I think my turbos were maybe too aggressive or something, probably, which is the case for most of my losses. The other one was 26th of July until 31st of July, so I guess if this probably must have been right here or something, and I guess I sold somewhere here or something. Oh no, that can't be right. Probably, okay, let's do this. Oh no, it's not what I want. Let's do this. I probably bought it somewhere here in this range, and I guess it kinda hit my stop loss here because I assume I thought it was gonna be like something like this or something, and when it broke here, I guess on vacation I didn't really follow the analysis part, so I guess that can be a rule to always be active. Like, don't make short-term trades if you're not gonna be active in the next weeks or something. Like, you need to have the time to look at your trades and try to make them as solid as possible and get out of them as soon as you see a reversal of the direction you're thinking. So let's make a rule about this. Put in the time. Short-term trading is not once a week, something like that, or something. Not on vacation, maybe, for myself, because I'm going soon on vacation, and I guess I don't want to make the exact same mistake. So you have to be able to watch the charts and see when patterns are breaking or when it's reversing its direction, the direction you're thinking. So it's also an important rule. Next, I'm gonna look at all the faults I've left. I think I can scroll through quickly for you guys. So let's see, we have some wins here on AB InBev. Yeah, I guess a lot of these companies I invested in are really a bit cyclic. So, and then yeah, of course, I shorted next thing. After my big loss, I shorted and I kind of made like a 140% return. So this is actually kind of nice to make 400 euros and get 1,200 euros back. These are some little losses. Yeah, I guess the rules don't really have to be that specific. Like, I made so much the same mistakes, like keeping on too long or something. I really had low cash trades here, so I guess it's also don't make too much trades. Especially when you have fees attached to them. This one was kind of good one. I guess this was when the pandemic happens, when I said. So kind of make me a lot of money going short these days. I tried going long, of course, didn't work. Of course, it didn't work out. Yeah, shorts went well those weeks. I made all money on it. What's this one? Euronav, yeah, this was a good one. Yeah, Euronav. I guess Euronav is really a cyclic company, and I made a lot of money on them. This one I made a lot of money, but it's okay. So maybe one other rule I think of right now is stick to companies. Maybe I can add it here and keep and try follow them for new opportunities. I guess this one is a good one because when you follow a company, you usually have a better understanding of where the stock is going and where do you think what the general thinking is of people of how much a stock is worth. So you generally have a better understanding of how much people will be willing to pay in the future. I don't know why I went so all in on Danone, probably like 1,300 euros. This is like way overstaked for a little return I had. Also, this is not really a volatile company, so maybe not the best time to have bought in. And yeah, I think these are pretty obvious that kinda it's all the same mistake, I guess. Don't go too aggressive. This is when you would try to make up for the losses you have with even aggressive stakes, and usually they don't work out. Like, I'm lucky that the Euronavs worked out and the ACM International. Those are lucky ones, I would say, but usually, like you see, they don't go that well. I had like a 10,000 turbos one here. It was 7 cents, 5 cents, and 4 cents. So I actually bought more turbos when the turbo price was reducing, and this is like in a day or something. Like I have 3 times the transaction fees. Yeah, I would say this was not one of the best losses I had, but so I kind of made the rules I want to keep myself to, and maybe are interesting for you guys to know. I condensed some into one and wrote a few new ones. So first, always trade when you have confirmation of the direction you're trading in. Follow indicators. They're usually right. So what I mean by that is indicators are there for a reason. Indicators are like a statistical, technical analysis, and how you have to look at stock markets is that if you see some patterns that are bullish or bearish or whatever, and you think it's going that way, you have to play the multiple, like you have to play multiple times in order for that to really make a difference, to get an edge. Because if you place it once and you have like the 60-40% win ratio, and it's like the 40% win ratio, you lose all your money maybe instantly if you have 40% chance of losing in the trades. So if it's important to make like 10 trades which have 60-40% win ratio, or success ratio, I would rather say. So it's important that you do like multiple stakes, and that's what's one of the last rules I made. Don't make too much big stakes. I know I say BTB, for me it's like a 25% max of my portfolio. This is a really big stake, which I wouldn't suggest anyone do, unless you want to make things spicy for yourself sometimes. But usually you want to be around 5% of your portfolio into one trade at the max. Yeah. But I think for mine I will start probably off with 10%, because 10% of 420 euros is 24 euros, and it's not a lot to start trading with. So second rule, Bollinger Bands are good indicators of stock volatility, presenting good buy and sell time points. Bollinger Bands, it's a good indicator of stock direction. So Bollinger Bands is probably one of my favorite, and I think for many people a favorite indicator, because it keeps track of volatility and how the prices changes towards some support volatility systems or levels, and how it bounces back from certain other Bollinger Bands, for example, the outside bands. So Bollinger Band, one of the key indicators we will be following. Never buy too aggressive turbos, of course, you saw that already. Place good stop loss alerts. You don't have to put stop losses, because with turbos it's really bad to put stop losses, because sometimes it gets like hits before the market opens or something, and you really don't want to lose your money on a fluke, like a little dip in the morning or something that you didn't expect. So your max leverage in my case should always be 10. Like I have had leverages of 30, 40 turbo, which is like a few cents away from rendering worthless, which I really don't suggest anybody follow this. So 10 is probably the max. I will rather, like, it's maybe better to determine stop level or stop niveau, I don't care how you call it, and look for stop loss limits that are around there. Stop losses from the turbos. Below this, yeah, presumably. So fourth rule, know your company, try to invest in, follow them for new opportunities, follow the news of your company. So this is like general, like how better you know a company, how easier it is to predict, like if companies are cyclic or if companies will have good earnings in second quarters for example, because it's sunny or because your company makes sun lotions or something like that. I don't care. Like, try to understand what your company actually makes money from and what people actually value in those companies. This is important for you to look at good moments to buy in when companies are undervalued or something. So put in the time. Short-term trading is not once a week, not on vacation. Like, you actually have to be, especially when you're like day trading, you have to constantly look at your trades. So I would suggest, if you're swing trading, like, you at least have to be on like most of the like every stock day. You really have to be online at least once or twice a day, like, to check where the stock is going, if you should make other limits or something, or put in an order that you want to buy or sell at that point. Seventh rule: know when you want to bird. Yeah. So this is, maybe I could have condensed it with one of these others, but you actually have to look at when you want to buy in and predict this, like, or establish this like a few days in advance, like prior. I mean, because if you don't do the work at forehand and you do it on the same day, you may be like really subjected to the fear of missing out, and you're really like following the herd, not sure where the stock is going, and before you know it, you're in a trade that you really didn't want to be in, to say the least. I've had this plenty of times, so this is certainly one of the important rules also. So that's it for the rules, I guess. Maybe I'll elaborate a bit more on them later, or add some more rules once we're trading in the channel. But thanks guys for watching, and see you in the next episodes.